shares in the largest cannabis company by market cap are dropping today. You can see there Canopy Growth shares off by about 8% right now. The company reported mixed fourth quarter results after the bell last night. Revenue for the quarter slightly topped estimates, coming in at 94.1 million Canadian dollars, but the 98-cent per share loss was larger than analysts had been bracing for. So joining us now on the phone for more on the quarter is Canopy Growth CEO and co-founder Bruce Linton. And Bruce, thanks so much for taking the time. I want to ask, though, because there weren't a lot of upbeat notes in the numbers themselves, but you were optimistic on the earnings call. And I want to start with margins because they dropped to just 16%, down from 22% last quarter and below estimates that analysts had at 24%. But you called that a bottom on the earnings call and projected margins slowly going up to 40% by the end of the fiscal year. So how do you get there in your mind?
Well, so we've already kind of been there, right? Q3 2018, we were running a platform that was about 600,000 square feet, so a substantial production platform. But we could see that obviously the demand was going to be much greater, so we increased the size of our platform about eightfold over the last 5 quarters. And the reason that matters is when Q3 we had the 600,000 square feet, we were 50+% gross margin. Mm-hmm. And now that we have this big platform, what happens is when you build a bunch of stuff out and you start hiring people, it becomes a burden. It decreases your gross margin because you're not fully utilizing it, but it's actually, drawing resources. And so now that we've tipped up and are running about 4.8 million and we're seeing the harvests come off, you can fully expect that we return to our prior margins as a target, and we should be able to do at least that well because these assets are bigger scale, they're designed and thought about, and when we knew we stepped into this that the margin would go down, it would hit a bottom until you got utilization, and then it would come up. And then it should go up even higher in the fourth quarter this year, first quarter next, calendar, because we start to be able to make products that are much more sophisticated, meaning that they use much less cannabis and the cannabis gets mixed in with liquids and turned into a clear beverage, so the embedded cost of the beverage from a cannabis perspective is much less versus the value.
Okay, so call it a bottom there, and we'll see improved margins later on. I also want to talk about recreational sales in Canada because that seemed to be a problem. They fell for the quarter, down about 4%. And last time we talked, you mentioned the trend of falling marijuana prices. And despite those trends, you're still projecting positive EBITDA by fiscal 2021. Mm-hmm. So what's going to be the growth driver to get you there if you're seeing both of those trends?
Yeah, so we would have sold more cannabis in the quarter if we had more cannabis to sell. Right, the form factors. What we had to do in the last 3 months of last calendar year is there was no cannabis in the inventory. Right, this was just beginning, so we had to fill all the shelves. That sold through, and we had to sort of pretty much fill them again this quarter past. And we could have sold more, but when you don't have it in exactly the right form factor, the right strength, and when it's only the second quarter of a sector, guessing is as good as you could do. And so where we are now is we've got more of what we see as the short-term demand, meaning reasonably high THC, dried cannabis, ideally pre-rolled. We have inventory that's matched with the products we're allowed to sell in Germany, so that should go up. And we're back on to medical as a push. But, what we're doing is we doubled the revenue in a company to 225 million that's been around selling stuff for about 5 years. Mm-hmm. And a lot of that doubling came in the last half of the year. And we just think this is really the beginning of the beginning. And if people look at it and said, I'm going to sell today, I think what they're doing is saying, now that they've done all the work, built all this stuff, and they're going to start getting the margin yield off of it, I don't want to be around for that good part. Not sure I fully get that.
All right.
Bruce, can you talk a little bit about your plans for growth for hemp products in the U.S.?
Yeah. So we've been pretty visible about New York State. We've selected the site. We've got RFPs out now for the alterations necessary to take about a 400,000 square foot building just in sort of the southern tier of New York State and convert it into a processing site. We have contracts in multiple states with farmers because principally the business of growing the hemp is others. We want to process it. We've defined product lines that we will launch in states that will regulate. So New York, and we think there are 6 other states coming. And those will go from health and wellness to potentially, a CBD type vape or beverage. And our platform is designed so that if a big box or a large C-store wants to actually have something that's going to stay in stock, be certain to be true in terms of its branding and its efficacy and its dosage, that we're the choice. And the assets that we're building out for that will also be quite suitable, if and when permissible, to process cannabis And at that point in time, we would have pulled acreage into our portfolio in the 20 states they're in. So what we're doing is laying down track, but we're also going to be generating revenues off of that starting in the Q4 calendar window.
Hey, Bruce, I understand it's not up for debate that you have massive scale, and you just mentioned acreage is holding in your company. But when you think about your moat and your competitive advantage, what do you think that really is as you see the space continuing to get more and more saturated?
Yeah, for sure, nothing we've talked about yet, right? The exciting part is the plant, but it's actually not the exciting plant. So we have 90-plus patents issued to us already. We have a couple hundred families that are in. And we're doing clinical trials. We've announced 60 various types of clinical trials, either started or about to start. And the moat and the differentiation is going to be how do you create outcomes people will pay for, and how do you protect those outcomes through patents and science. And I would say that we are all in on that mode. And, whether it's a beverage that's a good beverage, that's informed by the science that was related to doing medical research. And I think that's it.
I mean, it sounds like you're all in on the last part that we've been talking about when we talk about hemp, because, some other outlets might have missed the emphasis that you guys have been putting on hemp and CBD, but not here at Yahoo Finance. We've been all over that piece of your business.
Zach, how could you miss it? I'm back every 3 days.
Well, because it's always new. It's always new stuff. But on the call this morning, you made a pretty bold claim, perhaps the boldest claim in a long list of claims that I've heard you make. But you said Canopy could be the leading business in the CBD market in terms of market share by the end of the year. And I know you've been investing in this space, but when it comes to sales there, it's a pretty big established industry. We've already got some big players in the space already. So correct me if I'm wrong, but what's your starting point right now when we're talking about CBD sales for Canopy? I didn't see them in the list when I went back and looked.
No. So what's being sold now, there's a couple of pharmacies that have said they're going to carry it. If you go into the most often, they're out of stock. What we looked at when we sat down with, the big players, what success look like if you're running a big chain? Successful looks like a diversified set of SKUs that will be maintained in stock and actually have research to produce an outcome you want. So you don't show up and say, here's my first truckload. What you do is you have a national launch plan as permissible and a major state-focused push. And so I think we're state licensing. I'm not sure most are. We're trying to follow the federally intended rules, and we're doing it at scale where we can actually confirm the source, origin, and controls on CBD.
Well, you think it's going to be a leading market share by the end of the year?
Yeah. Well, I said my position is that I think the big guys are on the side until a competent large company can deliver to them the certainty they want. When the large guys step in and fill their shelves, by default, you have all the foot traffic, the visibility, and the transactional platform.
Yeah, for
if
sure.
If we make the right products, people are going to buy them. But
we've already seen a lot of people getting to Kroger, CVS. We've seen a lot of people, Walgreens. Yep. I mean, there are a lot of companies already on those shelves.
Well, there are, and there's some sellouts and there's some announcements. Our approach is build it to scale, put the brands together, and launch them with a depth of inventory and capacity. And so when we look at the size of our extractors, for example, that's how you get the CBD out of the hemp plant. We design these for thousands and thousands of kilograms of throughput. That is not the standard. Many of these other operations are very small and batch-oriented. But when you put these assets together, you need to actually plan over the next 9 months, how am I installing it and turning it up, not how do I scale so I can take a couple hundred pounds.
All right. And well, then you're going to have to keep us posted on the plans.
3 days later.
Yeah, you're going to have to keep us posted, Bruce, on the plans to get there, because it's going to be a big, big jump.
Yep. We're ready for it, man.
All right. Bruce Linton, CEO of Canopy Growth. Thanks so much for taking the time. Appreciate it, sir.